Welcome back, everyone. I'm super happy today to have Jason Clouet. Jason is the Vice President of Bayview Asset Management, a Florida-based CPACE capital provider. And today we're just going to pick Jason's brain about the CPACE industry and the state of the market, and also talk about one of the creative ways that Bayview facilitates CPACE deals in Texas and nationwide. Jason, thanks for joining us.
Thank you so much, Olivia. It's really a pleasure being here and spending the time to, during the holiday season and really talk about pace.
Yeah, it's a busy time of year. I definitely
It
appreciate
is.
you taking the time. I want to just start by having you tell us a little bit about yourself. I know you have a deep background in commercial real estate in general. How'd you get into the CPACE world? Just give us a little bit of an overview.
No, absolutely. It's actually an interesting path. So I started my career in the hospitality industry, 25 plus years ago. Spent time in operations. Then back in 2004, started an investment company with a partner, and over the last 20 some odd years, bought and sold close to $1 billion worth of assets. At one point, we had over 28 assets in one of my partnerships, and anywhere from full service Marriott's to limited service properties to independents. So kind of a wide range of investments. We also had a couple awesome office investments, a couple senior housing investments. So across sort of the real estate spectrum. Really interesting how I got into the PACE arena. Back in, I would call it 2017, 18 range, we looked at actually doing some C-PACE on a couple of our assets. And back then it was, still sort of at the infancy, I want to say, as far as how it was being explained to senior lenders and everything else. And we didn't have luck getting our senior lenders to consent. And I really kind of said, hey, this is a great program. There's a lot of really interesting attributes to the program with not only sort of the green energy component, but really just sort of the ability to finance those energy efficient upgrades. And I kind of saw it really working well, not only in the hospitality industry, but also throughout commercial real estate. So, opportunity came up in late 2021, going through COVID, which we all know was a fun time in the hospitality industry. And I said, I really think this is something that can be very interesting to try to, I viewed it as kind of like at the very fledgling early stages of the industry. And I felt there was going to be a big boom, especially where we were at with the capital markets. And, it really went from a couple hundred million a year to over, several billion a year where it's at now. And I think over the next, 3 to 5 years with all the players in the space, it's going to be 10, 15, 20 billion a year industry. So it's not mainstream, but it's definitely getting there.
Yeah, absolutely. It's interesting that you've really watched it grow and evolve, and
Yeah.
it has kind of happened the way you thought it was going to. So you talked about how your background is largely in hospitality, and I know for us at Lone Star Pace, hotels are really leading demand for this product. We've had a lot of different hotel C-PACE projects, whether they're new construction or recapitalizations. I've always been kind of curious, just because I'm still kind of new to this industry, why hotels work so well with CPACE, and I'd love to hear from you on
Yeah,
that.
no, that's a great question. I think there's a couple of reasons. One, hotels, especially on the new construction side, there's a large component of PACE eligible items because of the nature of a hotel with all of the major mechanical, all of the HVAC, the windows, all of the components that we can actually qualify. With hospitality, it kind of encapsulates all of those improvements. So that's one reason. Two, I think it really works well because look, the financing for hotels is a little bit different than, let's say, multifamily, where you have, HUD takeout or agency takeout. The financing, long-term financing is a little different for hotels. The sort of life cycle of a hotel is a little bit different as well, in that, it's a very capital intensive business in that every 7 to 10 years you have to do a full renovation. So I think those factors really play into, to being a very good candidate for CPACE, whether it's at the construction or at the renovation, because when you're doing a full renovation, a lot of times you're not just touching the FF&E, you're touching windows, you're touching elevator upgrades, HVAC, PTAC upgrades, which are all PACE eligible. So I think it sort of just lends to being a good candidate for PACE financing.
Yeah, that makes sense. So it checks a lot of boxes for
Yeah.
hotels. But
Yep.
as you said before, and as we've seen, it's really come to be embraced by a lot of different asset types and owners of different asset types. So you guys at Bayview, you offer a combined financing program that basically packages CPACE with the construction financing. And correct me if I'm wrong, my understanding is that essentially streamlines the process for the property owner who want to add CPACE to their capital stack. So explain to me the thought process behind that offering and how it helps to avoid obstacles in the underwriting process.
No, no, great question. Yeah. And it's pretty interesting. Here at Bayview, we're blessed that we have a great organization. We're a $19.5 billion credit strategies investment firm that has many different verticals. We have our PACE division as well as our large balance loans. So we came up with our construction program a couple years ago to pair with our PACE. So it gives us a little bit of a competitive advantage in the marketplace in that we can provide both sides of the equation. We also do a large majority of our PACE outside of our large balance paired combined program. So we can work with other senior lenders, but within our program, it really provides an opportunity to look at sort of a one-stop shop, and that's very attractive to many borrowers. And we've had some good success. We've done multifamily deals, we've done senior housing deals, or student housing deals, and hotels. And we're about to close a $100+ million combined package on a hotel construction project. That's very exciting. We will really be able to sort of create an accretive financing structure in that cost of hotel construction obviously is not nearly as cheap as it was prior to the pandemic. And by packaging our PACE along with our construction financing, we can get to a combined interest rate that is a lot more palatable to make these deals work today. So, it's definitely a great program, and we look for strong borrowers, we look for strong projects and strong markets, and that's how we look at it. We're a credit shop, but we really are trying to expand this program to reach a broader market, I should say.
That makes sense. So it sounds like it's definitely cost effective. I have to imagine that one of the benefits is also the fact that you guys are acting as the senior lender. So you don't have,
Mm.
the borrower doesn't have to go out
Yeah.
and find a senior lender that's willing to consent to CPACE. Well, one of the really cool things we've been seeing lately is that more senior lenders are willing to consent to CPACE. So are you starting to see demand shift at all for the combined financing program that you guys offer because there are more senior lenders out there that will consent, or is it still, it's just an easier option for borrowers to have that one-stop shop?
Yeah, no, it's pretty interesting. Look, it's great that we're starting to really work with a lot more senior lenders, from banks to debt fund lenders, that are starting to consent to PACE because they see the value. They see how the value of creating a creative cost of capital to our project, the ability to maybe possibly expand the credit spectrum a little bit. For us, from a standpoint of, is it taken away from our combined program? Absolutely not. There's so much business out there right now because look, the banking industry still hasn't really recovered from where they were, and so there's still the private credit shops like us really have pick of the litter as far as the type of deals we want to do. So no, look, there's so much runway for us on this combined product that it really it just creates more opportunity in my opinion.
Very cool. Yeah, I mean, there's just so much runway for PACE in general,
Yeah.
right? It's still such a small piece of the overall market.
It really is,
Yeah.
and we see that as where the opportunity is, and it's really, we want to focus on larger deals, but we still will look at for quality sponsors smaller deals. So we're really trying to get into that more jumbo loan space, 50 million and up. We're about to close on a $137 million CPACE loan on a new construction project, hopefully this week, and you will have some good press about that. That puts us into the large loan space, and we're very excited to really sort of expand that. And we're looking to really expand into Texas as well. And I know that's something that is important for you, as we
Yes.
view Texas as a huge market for us, and we're looking to really expand.
That's great. Yeah. I mean, there's so much going on here, It's like this, there's so many deals happening, even when other places are kind of, seeing things slow down. It seems like places like
Yep.
Dallas are still rolling. So let me ask you a couple more questions about this combined program. Is this just for the construction piece, or can it roll over into permanent financing?
Yeah, so typically, I'll answer it in two ways. So typically, our construction loans will be short-term construction loans, 2 or 3 year plus 1 year extensions that will look to be taken out. We do have permanent financing options, but in general, I mean, the way we underwrite deals is we underwrite it to say, okay, it's going to be, a 3 year takeout. Once it's constructed, stabilized, then we'll probably be look to take that out. The pace we look at, we'd like the pace to stay in. But look, it really all depends on where cost of capital is, where the credit markets are in 3 to 5 years when you go look at. So we always underwrite for a takeout, and then obviously with the pace, we can keep that in for long-term financing, fixed rate financing.
Got it. That makes sense. And in terms of asset types, and we've talked about hotels,
Yeah.
you mentioned a multifamily there. What's this a good fit for? Is it just kind of anyone can benefit, or is there an area where demand's really been concentrated?
No, and see that's the great thing about our firm is, we have the flexibility to look at all asset classes. Hospitality is just a strong point for us. We've done some great deals in hospitality, and I think hospitality continue to be a great space for us. But we're also doing quite a bit of multifamily. We'll do self-storage, we'll do industrial, other types of commercial, student housing has been a great space for us. Office, we will look at selectively.
Mhm.
It's obviously probably the toughest of the asset classes to finance right now because I think the office sector is going to feel some more pain over the next couple of years. But we have done. I mean, we just recently did a CPACE transaction in Texas, in Dallas, on a retroactive basis. So we will finance office on a very selective basis. So, all asset classes, which is great.
Awesome. That deal was Meadow Park Tower in Dallas.
Yes,
Yeah, that
yes,
was with us.
yes,
Yeah,
absolutely.
that was a good one. Yeah,
Yes,
definitely.
it was a
That
great
was
one,
where
and
office made sense.
that is a great borrower,
Yeah.
great location of an office product. We financed about $3 million worth of upgrades that were done. That were going to really help that building out from an energy efficiency standpoint, and it just makes a lot of sense on those kind of assets. So yeah, we're very excited to work with Bradford on that.
Yeah, I mean, and just as an aside, like the office market, it is changing, it is evolving, and the buildings kind of have to change and evolve with it,
Yeah,
right? So PACE is a
yeah,
good fit if it can work on the numbers side.
that's right.
So tell me, like how you mentioned before, banks have really pulled back, and that has made the combined financing program even more attractive because you guys are there as the senior lender. We are seeing interest rates start to come down, but banks obviously haven't jumped back in fully yet. How do you expect demand to change once they do re-enter the lending fray?
Yeah, no, that's a great question because I mean there's such a void because of the lack of liquidity with the banks. A lot of the banks had a lot of loans on their books where they weren't getting payoffs. Several of the banks that we've been talking to, we're starting to see where they're getting payoffs and they're starting to kind of loosen up on new origination. So I think we will start seeing banks and re-enter into the fray in 2025, but not near the level. So I still think there's going to be a big gap that's going to play for groups like us, for the private capital groups, to where I think there's still going to be a lot of opportunity. I think we'll start seeing, talking to a lot of my broker friends on the investment sales side, they are doing a lot of BOVs right now. So transaction activity is expected to probably pick up some in 2025. It's still not going to be gangbusters like it was pre-pandemic. Just due to many factors of the interest rates. I mean, we are seeing interest rate cuts by the Fed. We just saw one this week, but they did come back with news that they're projecting only to do 2 cuts in 2025 instead of 4 or 5. So I think we are in a higher for longer situation. That I don't think we're going to get back to the very cheap capital that we had years ago. So I think it's going to be the next several years is going to be a good time for groups like us to really provide accretive capital. We provide flexibility. Our loans are, recourse during construction from the standpoint that there's completion guarantees and then it goes to non-recourse. So that provides, a very, interesting thing for borrowers where they're used to, bank that's full recourse through the term. So, I think there's going to be opportunity for us, even though we are heading into, a moderating interest rate environment. I still don't see it as being a lower interest rate environment for a while.
Yeah, yeah, no, I mean the days of free money are over.
Yep.
And I think it's interesting. And one of the silver linings, I guess, with this capital markets dislocation is it did give a chance for products like CPACE to kind of become more pervasive. And then in that process, people started to actually see the value. And
That's
so
right. That's
it,
right.
it confirmed the value and that'll live on even as, things get a little easier, I guess, on the capital market side. So I'm going to ask you to pull out your crystal ball. We're at the end of
Yeah.
2025. I'd love to hear from you what you think 2025 is going to be like for the CPACE market in general. Will we still be firing on all cylinders? What are your thoughts?
Yeah, no, I view, a very rosy sort of outlook for CPACE, going forward. It's a very interesting time in that, I think the capital markets that we've been through in the last 3 years have sort of provided the platform for CPACE to be successful going forward because now we're getting a lot more senior lenders and banks to consent to CPACE. And, banks we're really trying to start work with banks. Hey, look at us as a participant because that participant market is really closed down. So I think there's some opportunities to keep growing, the CPACE business. I think it's going to be a great year, 2025. There's been several large transactions that have happened in the last year or so. We're completing one now, like I mentioned. I think that's a space where as we can start getting to do larger and larger deals, it just sort of expands sort of the sponsor base. I think we're starting to deal with a lot more sophisticated borrowers. Whereas before, you had really good groups that would look at CPACE and be like, yeah, it's not really worth the trouble, because we would just call up, bank, XYZ, and they would give us whatever money we needed. And now that it's not quite as easy, and
Mhm.
they're really starting to see the value in CPACE. And I think that's really where 2025, where we're focused, is really working with really good quality sponsors on great projects that have, the equity raised, they're ready to start the development so we can really jump in and get to work and really expand CPACE. So, I mean, whereas CPACE used to be a couple $100 million a year business, now we're going to do, over 3 billion this year, probably as industry. Next year, I think we'll do over 4 or 5. I mean, I really do think CPACE has a lot of legs. And it's an infancy. I mean, there's a lot of private equity flowing into CPACE for a reason. A lot of investments into different groups because they really see the value in CPACE and they see it as a sort of a burgeoning market that's only going to explode.
Absolutely. No, I agree wholeheartedly. Well, you mentioned before you guys are looking for those good sponsors. Obviously, they're all here in the Lone Star State.
Absolutely.
What's your plan for Texas for
Yeah,
next
Texas is, look, it's really funny when we sit in our weekly, meetings, we really say, hey, we've got to get more done in Texas. Texas is a market that it's very business it's very advantageous to do business. It's pro-business. You can build there. There's all kinds of new companies moving into Texas, basically every day. So we really view Texas as a huge market for us and a huge opportunity and a huge target for us. We've completed several deals in Texas, but, we really, really want to sort of expand our presence in Texas. Jeff and I are going to be spending a lot more time in Texas to really sort of uncover some opportunities and hopefully get several deals closed. So I mean, Texas is a big, big target for us.
Yeah, that makes sense. Makes sense. Well, we are also looking forward to 2025. I'm super positive, about the way that everything is headed, and I think it's going to be another great year. So I really appreciate your time. Thank you so much for stopping by
Absolutely.
and chatting with me today.
No, it was great and have a very happy holidays. And then please, anybody has any questions about CPACE, please reach out. I'd love to talk to you and see how we can get some business done.
Absolutely. I will have Jason's contact info at the end of this video. And as always, if you guys have any questions for Lone Star Pace or need an administrator point of view, feel free to reach out to us. Thanks again, Jason.
Thank you. Happy holidays.